Hello and welcome back to our channel. In the dynamic world of trading, timing is everything. Today we are diving into technical analysis, the art and science of reading market charts to predict price movements. Forget fundamental values for now. We are focusing purely on price action and volume. We'll explore chart patterns, indicators, and trends, giving you the tools to potentially spot opportunities and navigate market fluctuations. Whether you are a day trader or a swing trader, understanding technical analysis can give you that valuable edge. But before that, make sure to like, share, and subscribe to the channel so that you do not miss out on any new updates coming from us.
So if fundamental analysis is like checking a car's engine, technical analysis is more like watching the car race around the track, observing how fast it goes, how it takes corners, and how often it pits. Now you're looking at a price movements and trading volumes on a chart. Hope to spot patterns that might repeat in the future. This exactly is what a technical analysis is. You look at charts, you look at candlesticks, you look for patterns, you look for volumes, and that's how you decide what the future price of that stock is going to be. So now what are the elements of technical analysis? So the first one is focus on charts. So there's something known as price charts, right? So the graph that shows how a stock price has changed over time. You'll see uptrends, you'll see downtrends, and the periods where the price barely moves. Then comes support and resistance. So support is like the floor where the stock price tends to stop falling and bounce back. Resistance is like the ceiling where the stock price often hits, stops rising, and might come back down, right? So these are supports and resistance that we talk about in technical terms. Then comes the common chart patterns, right? It's something known as uptrend, which is higher highs, higher lows. So higher highs would be there and higher lows. So the previous low is lower than the next low, right? And the next low is higher than this current low. That is known as higher highs, higher lows. It represents uptrend. Then comes downtrend, which is lower highs and lower lows. So price is moving down consistently. Then comes sideways, which is range bound. The price moves between a certain floor and a ceiling. So there is a gap that is created. There is a floor, there is a ceiling, and the stock is just between those two, floor and ceiling, not really going up or down much overall. Then comes technical indicators. First is moving averages. So this is a very common indicator that you use on a chart. Think of it as an average price over a certain number of days. It smooths out daily ups and downs so you can see a clear trend. The second indicator that we look for is relative strength index, also known as RSI. So it tells you if a stock might be in the overbought zone, which I talked about, that price is too high, might go down soon, right? Or oversold, which is price is too low, might go up soon. So this is also a very important indicator. Then comes MACD, which is known as moving average convergence divergence, right? So it's basically a graph that tells you, which helps you to see changes in the momentum, right? It accounts for volume. It sees when the line crosses, it can signal a shift in trend, right? It's a very, very important. Then comes Bollinger Bands. These lines move around the stock price chart. If the price goes above or below the line, it might mean the stock is trading in extremes, right? Too high or too low, right? So these are one of the major indicators that we look at when you do technical analysis. I'm just right now giving you a gist of the differences between the fundamental and the technical analysis. So I'm just giving you a brief idea of what to look at, when to look at, right? Technical analysis is more short-term driven, right? When you want to take out your money, let's say within a year or within a week, so then you focus on technical analysis more. The next element to technical analysis is market psychology. Yes, psychology is very important in technical analysis. So basically, technical analysts also look at how people behave in groups. When someone is greedy, the stock price might rise quickly but can crash just as fast. This mostly happens during IPOs. When the IPO is launched, people tend to buy more. So it hits upper circuit, then falls continuously. when the momentum is changed. So when everyone is fearful, prices can fall sharply. But that might be a good buying opportunity if you are a value investor and have a long-term vision on the stock.
And that concludes our look into technical analysis. We've covered the core concepts from identifying chart patterns to utilizing key indicators. Remember, technical analysis is a skill that requires practice and continuous learning. While it can offer valuable insights, it's not foolproof. Always implement sound risk management and remember that past performance is not indicative of future results. We hope this video has provided you a solid foundation for your technical analysis journey. Thank you all for watching.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.